Great. Welcome back. Agenda item 8, which is the Pensions Administration report. And I'll hand over to our colleague, Jenny.
Yeah, evening, everyone. Yes, the performance is improving is the good news. Performance for the LPPA is improving and is now above the SLA target of 95%. It has been a very challenging year overall for the LPPA due to changing of the administration system mainly, but also due to staffing issues that they've had. There's been a high turnover, and this has led to some problems. There's also been significant increases in people retiring and claiming their pension benefits. So there has been some delays in payments, but these are now being addressed. The issues are being addressed, and improvements are being seen. So that's good news for us moving forward. I think it will take a bit longer still. I think it's still going to be a few problems for a few more months, I think, but we are working our way through it and catching up on all the outstanding cases that there are. The annual benefit statements are nearly complete. Most of the issues are due to employers not supplying information or not answering the queries that the LPPA have on cases. The real number of cases that they have to deal with is only 33. The other cases are on hold for other reasons, but the 33 cases that are left are due to things that need to be investigated within the system. So the new UPM system is pulling queries out of the system, out of the data that wasn't previously pulled out from the Altair system. So that they do need to be investigated so that the correct information is provided on annual benefit statements. The good news is that now with Pension Point Online, anyone can go in and get an estimate of their benefits at any time, and it will be more accurate than the annual benefit statement. So that's the current issues, the current position. If there's any questions on the report.
I've got Dean and I'll go to Ray.
So I just wondered why with the sort of casework performance, deaths are so much lower in percentage than everything else. So that's only at 83%, whereas other things are doing much better. Almost everything else is doing better. I don't know. There's some particular reason why that one stands out.
Again, it's the complexity of a death case.
Yeah.
You know, people who are dying today of really, their employment goes back a number of years, and it can go back to the 70s or the 80s, and it's crossing various regulations. But again, it's experience that you need to handle a death case. And they have struggled with high turnover of staff. Luckily, they have recently, just very recently, in the last month or two, been able to employ 4 new staff with the government experience and experience of working on UPM. This is the key. I think a number of staff left because of the change in system. They didn't particularly like working on UPM and the changes that it brought.
Thank you. I've got Councillor Wall and then I've got Councillor Rice. So, Councillor Wall.
So, and about issues with paying out, I suppose is the easiest term I can use. You know, what if there is someone in hardship in that case, and you know, then just not getting anything, right? Is there a route to lend or do something for those cases? I mean, there'd be few and far between, I presume, but you know, if they're reliant on that pension and it's just not coming in, what alternatives are there for them?
Yeah, so it wouldn't be a case of lending them. Any cases where someone is in difficulty and needs that money urgently will come to us. It will come to the pensions monitoring team in Ealing, and then we will escalate that case to the LPPA. I mean, there has been a case this week, you know, and we can normally get it turned around in a couple of days and get the payments to people. So, you know, if situations like that do arise, we can resolve it quite quickly.
Is there a criteria for that?
No, anyone who comes to us, you know, we'll act on it quite quickly.
Councillor Rice.
Oh, thank you, Chair. Can I just ask on page 38, looking at engagement communications, it says that one Ealing Fund member attended a Making Sense of Your Pension session. Good thing one person turned up, or is it perhaps is it a bad thing that there hasn't been that kind of engagement, or is it just a matter of we need to publicise better that we can actually speak to people in that way? Thank you.
Sorry, I didn't quite get the question.
It's not a very good line, Miriam.
Okay. Okay.
Yeah, Councillor Rice, if you might be able to type out your question in the chat, and we'll be able to then
we'll do.
take that.
Yeah.
Thank you. Sukhinder.
Yeah, I think Miriam was asking why only one was only one person that attended Making Sense of Your Pension session. I think that's her question, but she'll clarify it. Jenny, it's in terms of a question that Ray asked, is there any potential to make an interim payment, particularly in if people are facing hardship, and maybe that's something that could potentially be considered, because obviously any adjustments would be made thereafter, wouldn't they? Yeah, once things are resolved. So I'm going to leave that with you. I don't expect you to respond straight away. Also, you mentioned that the statements are going to be almost ready, and I don't know if I misheard you.
No, with the annual benefit statements, there's only 33 outstanding.
Okay, 33. That's fine,
Yeah,
but that's
the
been zoned
majority have
down.
gone.
Yeah.
I mean, the percentage says 98.2,
Okay.
but there's 149 really, but only 33 of them are with the LPPA to fix.
Right.
The rest is waiting for information to come in.
Right. Okay, that's fine.
From outside
Thank
before they can issue them. But
thanks for that clarification. That's helpful. And in terms of the pension point estimates, because yes, it's a great thing. People can go onto it. They can put in a date in the future, and they can get an estimate. But has that also been taken into account, the system of the pay increase as well? Is that also in it as well? And obviously, when we hopefully get the pension increase announcement, that will go onto it straight away as well, I assume.
No, not technically. So Pension Point holds the figures as at the 31st of March 23. That's the last time we submitted a report to the LPPA. But what you can do is put in your current pension yourself. So there'll be an automatic figure sitting there, but you can update it. If you know your current salary, you can update the figure.
Right.
And then the calculation of the estimate will be based on that.
And maybe I can talk to you outside of this meeting. Have a number of individuals who are looking at retiring before normal retirement age. So it's they want to make sure that they can get each and every penny and pound that they're entitled to.
Thanks, Minda. Ray, Councillor Wall.
Sorry, on a different topic, the customer satisfaction scores. Am I reading this right, that there's only 20 surveys taken? And if so, why is it so small? Is there a reason for that?
That is right. It is a small number. It does just depend if after a phone call to the LPPA, if someone wants to take the survey or not. That's out of their control.
It's just spikes. I mean, it goes all over the place because 2 or 3 people having a different view, just completely. There's no consistency, should I say?
No statistical validity.
Well, not really. No. With just 20 surveys, or is it 20 all the time every month, or? And it appears to be.
Are you on the retirements one? Or
No, customer satisfaction scores.
on the help desk?
On page 32.
So in September, yeah, there was 19 taken on the help desk, or on the retirements, there were only 8.
Oh, I see at the top.
Yeah, across the top is the number of surveys.
It's
But
not. Yeah, it's not statistically valid, really, is it?
but yeah, it's, you know, you can't force someone to take.
No, I get that, but I mean, it looks great some months, and well, I don't know. Is there any validity in that, having that?
Having the chart, I mean, yeah, it would be great if 100% of people took it, you know, and then you'd know what a true reflection would be. But when you've got so few people taking the survey, you know, only 3 people in August.
Yeah.
I think the point is the presentation on a monthly basis makes it fluctuate wildly from one month to the next. You might be better to combine a whole year's figure. Get that variation.
Yeah, it's how the LPPA are choosing to report. It's not my report, no. No, it comes directly from the system, and that is their reporting.
Well, perhaps we can you can feed that back on behalf of us. But that might be a helpful way, because we might not be the only panel in London or in local government that's finding.
Maybe quarterly. I think annual's quite a long time to wait, isn't it? Maybe quarterly.
Yeah, but you don't already.
This is just showing it monthly, month on month.
I know.
Has Miriam's issue been resolved? Oh.
I've had my say, so I'll leave it there.
Thank you. Any other further questions? No.
So if people want, when they get their old age pension, there was delays for a while because of admin problems, and they said if you're in hardship, they will help people. So that your old age pension, you can get help there. So you can just tell people if they're eligible, they could get it in that direction with some information.
Okay, sorry, the question.
No.
Okay, well, I think there was just the one recommendation that we note the performance of the LPPA, and I think we've done that. So thank you very much, Jenny.
Thank you.
Okay. So next up, we have the pension fund performance monitor update for the quarter ended the 30th of September 2023.
Right, this is the updated quarterly performance report. Not a lot to draw your attention to, but I will first go to page 47. And just to make a correction on the cash return, it's showing there the cash return 2.03. We have been challenging it with our performance monitoring people because we know that the pension fund cash is swept overnight into a money market fund, and we're receiving north of 4.5% for money market funds. They have now looked into it. They've corrected this. The performance is still below the 4.5%. The money market fund has returned 4.5%. We also have some foreign cash which is held, and there is a drag through foreign exchange impact. So that performance will be just over 3%. We will still be behind the benchmark because that benchmark is also needs to be corrected as well, because the 1 year SONIA should be 4.33. So that will be updated for the next meeting, but they didn't come back in time to catch this report. The only other thing is the autumn statement where the Chancellor responded on their proposals for the LGPS. One of the things they're trying to do is to get us to invest more in private equity. They have still left the 10% target, but they're not going to make it mandatory. So I think we would be able to not necessarily invest 10%, but that is the ambition. They have still left 5% in levelling up. For most authorities, you will be able to find something in your portfolio that actually meets the levelling up criteria. They are looking to get bigger pools. They're looking to get larger pools. I think one of the ambitions, I think, is by 2035, they want to have pools of up to 200 billion. So I guess it might mean there'll be one pool at that point or two. And I think those were some of the key items to draw out from the consultation. Unless you've got any other questions, there is nothing else to draw your attention to here.
Thank you, Bridget. Were there any questions? No? Oh, Philip, a point you wanted to make?
Yes, not a question, but a point on the consultation. So in our reading, the government's response seems to have tightened up in one particular area. And that is that the original requirement to pool all listed assets by March 2025 has been strengthened. So the expectation now is that funds will pool all assets by March 25, which is clearly impossible. But funds do have the ability to comply or explain why they haven't been able to. So the main change really from the consultation exercise is the government is pushing harder on the pooling of assets.
And Philip, on kind of from your kind of expertise in this area, obviously you said, which I can kind of agree, that doing so in 18 months, or even if you say at the end of 2025, is ambitious. What do you think? What's your kind of feeling that what is a realistic time frame?
I think it will very much depend on how ready the pool in question is to provide the solutions that each individual fund wants. So if the solutions are already there in listed equities and listed credit, then conceivably you could get in by March 25. On the private market side, because as you know, most private markets investments are in closed-ended funds, and you have to wait to get your capital back. That process will take at least 10, probably 15 years to complete. And then for those pools that don't have all the solutions that are needed, and unfortunately for the Ealing Fund, that includes London Civ, there's a product development timeline, which, let's say that's 18 months, 2 years, plus the transition time. So that's perhaps 3 or 4 years to complete that bit of it. So, there is going to be a lot of explaining, I'm afraid.
Okay, thank you. Councillor Johnson.
Just being a little bit naughty, the London Civ still has got 2 members who've not put a single thing in the pool, and the government's done nothing about that yet. So before they get the rest of us to put all our resources in pools, maybe they need to do that first. That's just me being a bit naughty.
Point well made. Bridget.
I mean, the London Civ has a particular challenge in that they've got 32 boroughs with various needs. So I think they will take longer to get to the point where they can pool all 32 boroughs' assets.
Thank you. Councillor Rice, is that a fresh hand or
yes, it is. Can you hear me now? Because I've just gone outside.
Yeah, we can hear you loud and clear.
Brilliant, thank you. Yes, because it's a point I've raised before, because I'm always very interested in, we are on agenda item 9 as well, yes. Yeah, so because just about the student accommodation, how we just seem to be always doing so well from that. And it's always something that's always intrigued me. And I'm starting to make sense of it now, because it does seem that universities in this country, because we've got a problem with the tuition fees being frozen, is that we're trying to make up for that shortfall by attracting the students from abroad. And so no wonder they're using the student accommodation and it's doing so well. So the just thing I'm just wondering about, is there a point at which that might peak, do we feel? And also, I mean, what the reaction of how people might respond to the anti-immigration rhetoric that's going around, because I have seen an article this week where somebody was basically just having a go at foreign students as if that's the problem for immigration. So I do wonder if there is a point at which that might peak, and are we doing enough to look at other growth areas that we could be investing in? Thank you.
Well, that's probably a question for the specialist property managers, but I will say that as part of the strategy, well, it's on, but perhaps I'm not getting close enough. Can you hear me?
Yeah.
Okay. It's probably a question for the specialist property managers about when that will peak. But one thing we are doing as part of the strategy review is looking at the makeup of the property, especially when we get the money back from Lothbury. So it's probably something that we would be looking at, maybe a manager that does more student letting, but maybe I'll hand over to you if you have anything to add.
I guess, I guess a little bit. I think student accommodation is unlikely to have as good a next few years as it has in recent years, because I think there's sort of general acceptance that student numbers have peaked. There's general acceptance that rents paid by students in this accommodation are pretty decent rents, and at a time of real strain on cost of living, it's hard to see owners being able to put those rents up further. I still, we still believe though that it is an interesting asset class, and the reason for saying that is that in many universities, the sort of student accommodation blocks that property managers typically favour really only cater for a third of the students, i.e. the first year students. So there does still seem to be decent growth potential, albeit probably not huge rental growth per unit. So definitely an opportunity to consider as we figure out how to diversify the property portfolio.
Thank you.
Thank you, Councillor Rice. But did you also want to provide just a couple of sentences on Lothbury as well? I'm looking at the on the recommendations for us.
Right,
yeah,
that too, yeah, update. Lothbury, as you all know, we put in our redemption statement. They have recently, well, they reached out to us to say that they were planning on closing the fund on the 31st of December, and to start dividing any assets, any funds that they've received pro rata to all those who have put in their redemptions. But today we got some update. They are in conversations with another manager, and I'll probably hand over to you because you gave us a recommendation.
So they've been approached by UBS, who are making a proposal to merge the Lothbury Property Trust into one of UBS's property funds, which is called Triton, which is a decent fund. We rate UBS as a manager of that fund. We think it's quite an interesting option for the fund, because it would allow you either to transfer into the UBS fund and to remain invested in property, maybe not commercial property, maybe not forever, but to remain invested without incurring the costs of selling and then buying new property. It's also interesting because UBS would offer the ability to exit the portfolio at the point of merger. And would likely be easier to get out of the UBS fund at that point than to get out of Loughborough Property Trust on its own. Loughborough have asked for the termination of the fund, which was scheduled for the end of December, to be extended by a further 3 months to allow these merger negotiations to proceed. And we would be very supportive of that, and we would expect most of the investors to support that to support that request. So no guarantee that the merger will go ahead, but if it does, it would give the fund the option to join a much larger, more successful fund, or to exit at some stage after the end of March.
Thank you. Were there any other questions that colleagues wanted to ask? No. Okay. So I'll be a bit anal about this and kind of go through the recommendations one by one because they're quite different. So I'll be happy with, I think we're happy to have noted the value of the fund investments of just under 1.5 billion. We've noted the Loughborough Property Trust update. Thank you for that. I think we've noted 1.3 as well, the latest update on topical issues within LGPS. And we on 1.4, I think that wasn't ultimately very relevant on this occasion, but we've noted that as well. We obviously had the presentation from Darwin Alternative Investment a few moments ago. And then it's also worth noting to colleagues that the AGM for the pension fund for 2023 will take place on the 21st of February 2024.
Can I just ask a question, Chair, for you? Where's that going to be held? Because it used to always be in the Victoria Hall. Where were they going to
It
hold
will be virtually. Be virtual.
Oh, yes. 1-to-1 session. Yeah. Oh yeah, why not? Oh yes, doesn't matter much if people are having 1-to-1. So
Well, they're biscuits, or biscuits more important.
they're friends.
Disappointment all round, by the way, because I've just been to the Unison retired members' Christmas do, and they quite like coming in.
What did they do?
Yeah. Sorry.
yeah.
Because the way it's described here, it's that it's a surgery session this year. That's what it is. Yes. But my reading of it was that it's all going to be done online, and I would hope that we are going to offer some sort of face-to-face. Taking up Dee's point, because not everyone is savvy on the old computer, and some people don't even have internet connection at home or even these devices at all. So I think we need to be more inclusive, don't we?
I'm detecting that Jenny wanted to come in on that point.
So the surgery sessions are only for active members, and it will be over Teams or over phone calls. The logistics of arranging it within Percival House is quite difficult now.
Yeah, but I think we need to make the allowance, because we've still got members who are active that are not issued with the devices and aren't issued with mobile phones. We got housing caretakers and others and passenger assistants, etc. And they're the ones that really want to have information about their pension, because they may be getting on a bit.
No, understood. Maybe we take that one off to explore what what remedies we might be able to offer.
The problem with the sessions is that we've only got slots for 120 one-to-one sessions. So far, we've got 240 applications. It's likely to rise to about 400 to 500. So we don't actually see everyone because there isn't the capacity to. Everyone's questions are answered, but the booking form that is either posted out or sent by email to people that we have email addresses for, they can respond on that as well to the organizer if they wanted something more personal.
Okay, thank you. Moving on to item 10, which is the 2022-23 Pension Fund Annual Report and Audit Arrangements. And I think that is back to you again, Bridget.
Yeah, really, yeah, this is the pension fund annual report. It's not yet been audited because if you sit on the audit committee, you know that the auditors are behind on just about everything. But this is the report that will be audited. If you've got anything else you want to make changes to, you still can make, obviously not to the accounts bit, but to the pension fund itself. We did publish a draft version, or we will publish a draft version, but it's not yet been audited.
Thank you. Were there any questions? No. Were we happy to accept the 4 recommendations on the report? Yeah, I think we are. So thank you very much. Item 11, which is the Pension Fund Asset Allocation Strategy Review.
Okay. Right. We all had the session about a week ago, or just over, on the key recommendations. And unless you've got any particular questions, you might want to just go through the recommendations. The only key thing to note here is the additional recommendation, which I highlighted at the start of the meeting, which is, apart from constructing the implementation strategy, is to authorize the Strategic Director of Resources to progress and oversee the implementation of the revised strategy following consultation with both the Chair, Vice Chair, and Opposition spokesman, and report back at regular intervals. So that's the additional recommendation. But otherwise, on page 209, you can see what the key changes are. Maybe I'll just hand over to Philip just to highlight why we did the strategy review, what the outcome was, and why these recommendations have been made.
So, starting with the reasons for doing the strategy review, one is that it is good practice to do so on a reasonably regular basis, and the last one was 6 years ago. The second reason is that circumstances have changed. The fund is now fully funded, and therefore it was appropriate to consider how much de-risking might be sensible, and also the market is very different as well. Interest rates are much higher than they've been for a very, very long time, and as we've seen in performance, that has a really, really big impact on many asset classes. The key decision reviewed in the strategy review really is the mix of growth, income, and protection assets. Your current mix is 55 growth, 20 income, 25 protection. And the current strategy we considered to be pretty robust and still an appropriate strategy. We did look at a number of alternatives. And some of those alternatives, if you remember from the training, improved projected funding outcomes. So we've come up with a combination of those alternatives that do improve funding outcomes, and that's what's presented in the paper. At one level, it doesn't seem to make a huge impact. So we're reducing equities, gross assets down to 50, increasing, and also, as we've already discussed, switching a small amount from listed equities to private equity. We're increasing income from 20 to 25, and crucially there, increasing the allocation to infrastructure, which is very likely to be in the renewable space, and also introducing some listed high yield credit, credit being an ideal asset class for LGPS funds particularly at the current time. And then on the protection side, no change in the overall allocation, but we're switching some of the investment grade corporate bonds for index linked gilts. And the main reason for doing that is to improve the inflation protection of the overall portfolio. So small number of changes, reasonably significant impact on projected funding outcomes, and therefore we think well worth doing. As we've already discussed in the context of private equity, implementation is key. So we're going to spend an appropriate amount of time with Bridget figuring out the best ways of implementing these changes. And that implementation will take place over the next couple of years. We're not going to rush this. You may be, in the context of the performance that's still on the table in front of us and the continued red ink, you may be reassured to know that the focus of implementation is going to be on I guess 4 areas. One is how we can take some active risk off the table in listed equities and improve the resilience of that portfolio. How we can diversify property, so we're not solely dependent on UK core commercial property. How we can accelerate the implementation, the progression towards net zero. And finally, of course, how best to implement the new asset classes. So that's what we're going to be focusing on. And as Bridget mentioned, as we figure out the right answer, in each case, we will update the panel at the appropriate time.
Thank you. Do colleagues have any questions that they wanted to ask? No? Okay, I think that was very clear. So I think we have kind of 2 recommendations, 2 main principal recommendations. I think we've noted the outcome of the investment strategy. Are we happy to formally approve the changes to the investment strategy as set out in the 6 sub-points plus 7? Yep. Okay. And then obviously note the additional point that was raised earlier about the implementation of the strategy and coming back to us. Thank you. Then on to item 12, which is the Elim Pension Fund and our approach to responsible investment.
Okay, this is just updating on where we are with responsible investment. As you know, we commissioned a review of the fund's carbon footprint, which did show that the fund was less carbon intense than the general market. We agreed that we would be putting in for the stewardship code. We are still waiting for some quotes for consultants to assist us in this process, at least for the first submission. We have not recommissioned a review of the carbon footprint of the fund because we're still waiting for guidance on the TCFD, Task Force for Climate-Related Financial Disclosure. We're still waiting for guidance on what they're going to do with the local authorities, how we're going to do this. Also, the LCIV have already agreed to provide the carbon footprint information for the fund. So we're also waiting for that. There are some proposals which are coming out of the strategy review where you're recommending we move into funds that are deliberately decarbonizing and making a express opinion that they will be decarbonizing by about 7% every year. Do you want to expand a little bit more on some of those proposals?
Yes, of course, yes. Because they're good examples of the sort of things that we can do through the implementation of the strategy on RI generally and net zero in particular. Looking at your listed equity portfolio, as the carbon footprint report showed, you're actually in a really good place. Emissions is well below market, and the contributions that you're making to financing companies that provide key solutions for decarbonisation is well above market. So that's exactly where you want to be. But in the passive equity portfolio in particular, we think there are a couple of changes that you could make to accelerate things further. One is simply reweighting the allocations to the 3 managers that you have in passive equities, which will help a bit. And secondly is replacing one of the strategies with a more modern version from the same manager that, in addition to promising to keep emissions below the market, also promises to reduce emissions by 7% year on year. In other words, keeping up the good momentum. And 7% is not a random figure. It's the figure that the IPCC calculated was needed in terms of annual decarbonisation to get us to 2050 and net zero globally. So it's a very important figure. So actually a couple of really quite simple changes that we can make to help you along the track to 2045. I would, in terms of other things, I would highlight the second key lever of which Bridget has already mentioned as on stewardship, which is engaging with portfolio companies, which your managers do, to make sure they have good decarbonisation plans and that they're delivering them. And the fund of obviously engaging with your managers to make sure that's happening. That is an absolutely key lever. And doing stewardship as well as possible and keeping it focused on net zero is an important part of that. I think the stewardship code compliance, I think you'll find, is a really good catalyst for strengthening your stewardship activity. I took one of my other LGPS clients through to stewardship code compliance in the middle of this year. Getting compliance is a really quite challenging exercise. The FRC is really tough, surprisingly tough. But in the process of going through that exercise, that fund identified a whole number of different ways that they could strengthen the stewardship activity. And they were already pretty good at it. They're a very big fund. They throw a lot of resources at it. But they identified a whole series of ways that they could improve. So I think it's a painful exercise, but it's a useful exercise in terms of stewardship, which is a key lever to responsible investment.
Thank you. Were there any questions that colleagues wanted to pose on that report? No? Okay. Well, there were 7 recommendations, noting various outlined in 1.1 to 1.7, noting various aspects of the report, which I think we can say we have done so. So thank you there for Bridget and Philip. And I think, therefore, we've come to the end of the agenda tonight. The next date of the next meeting will be on the 21st of March, 2024. So I wish to thank Councillor Rice for joining us online and colleagues for joining us tonight, and Philip and our other guests. So otherwise, I wish you a very happy end of the year celebrations. Yes.
Sorry, it's I think it may be Keith's last meeting with us.
Is it, Keith?
So I think we ought to thank Keith.
Goodness.
Yeah.
Well, yes. Well, well, absolutely. I wasn't aware of that, Keith. Well, thank you very so much for all your service to Ealing, and I wish you all the best for your future endeavours on behalf of the council and this panel.
You can join us.
Yeah, thank you, Keith. Oh, thank you.
Thank you. Good evening.